Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. It is Tuesday, September 23, 2025. Today, we're really cutting straight to the chase, focusing on the hard numbers driving small cap mining news.
Exactly.
We've got a stack of news releases here, all about high-impact drilling, resource updates, the stuff that really moves the needle. So our mission today is pretty simple. Look at these results, figure out what they mean, not just the number itself, but, the implications for the projects.
That's right. And for you, the listener, what you should be looking for today are, well, maybe three things. You want high-grade hits, especially shallow ones. You want to see exploration success turning into actual defined resources. That's a big step. And how demand for critical metals is pushing companies to spend. We're digging into the numbers that point towards, commercial viability.
Perfect. Let's jump right in then. Gold first. We're starting in Suriname with Miata Metals Corp. They're on the CSE, symbol MMET, and OTCQB under MMETF. The headline: Miata Metals reports best ever drill intercepts at Sela Creek Gold Project in Suriname.
Yeah, this one definitely caught my eye. The key result, it's from hole 25 DDHSCL033, and it's pretty wide intercept we're talking about.
How wide?
35.6 meters, grading 3.04 grams per ton gold. And that starts fairly shallow, just 69 meters down.
Okay, 35.6 meters at over 3 grams. Wow. And wasn't there a higher grade bit inside that?
There was a really nice kicker. 3.0 meters running 8.93 grams per ton gold.
Wow. Okay, so talk to us about that 3.04 gram over such a width, 35 meters. Why is that significant?
Well, look, you need some context, right? Lots of big open pit gold mines operating today. They're maybe averaging 1 gram, maybe 1.5 grams per ton.
Right, much lower.
Exactly. So when you hit grades like double that and over a really good width like 35 meters, it fundamentally changes the potential economics. It starts to suggest you could have a large-scale open pit operation with potentially less waste rock to move.
So efficiency, built right into the rock.
Basically, yeah. That's what those numbers suggest.
And that seems to be what the CEO, Dr. Job Verbus, was getting at.
Yeah.
He called it the widest and best mineralized intercept ever drilled at the project. Pretty strong words.
It is strong language, and, the company's putting more results out soon. They have 6 more assays pending from that same area, the Johns trend.
Okay, so consistency will be key there.
Definitely something to watch. See if these grades hold up in the next holes.
All right, let's shift locations from South America over to Atlantic Canada, Galway Metals, Inc.
GWM on the TSXV, GAYMF on the OTCQB.
Right. Their news is about expanding high-grade gold at Clarence Stream in New Brunswick.
Yeah, and Clarence Stream, it's already a project with a significant resource base. This isn't starting from scratch.
So what's the standout number from this release?
It comes from their Southwest deposit. They reported 4.1 grams per ton gold over 16.0 meters.
16 meters, okay. Decent width.
And again, look inside that. There's a zone of 41.9 grams per ton over 1.0 meter. Almost 42 grams.
That's very high grade. And the depth?
That's the other key part here.
Yeah.
Really shallow. Just 26 meters from surface.
Ah, okay. So that's potentially easy to access material. The low-hanging fruit, maybe?
Could be. Shallow, high-grade material is often what you look for early in a mine plan. And remember, Clarence Stream already has, over 2.2 million ounces combined, indicated and inferred.
Yeah, 922,000 indicated, 1.334 million inferred. It's substantial.
Right. So these shallow hits, they feed directly into improving the quality of that existing resource.
And that ties into the CEO's comments, right?
Yeah.
Rob Hinchcliffe mentioned converting inferred to indicated.
Exactly. And that's a critical point for you, the listener, financially. Converting inferred ounces, which have lower geological confidence, to indicated ounces. Well, indicated ounces are more valuable.
Why is that?
Because bankers, potential partners, major mining companies, they place a higher value on indicated resources. The risk is lower. So converting resources increases the project's financial clout, basically.
So it's not just about more ounces, it's about better quality ounces.
Precisely. And Galway seems serious about it. They've got 3 rigs turning now and 42 more assays pending. They're pushing hard.
Okay, let's switch metals. Moving from gold to silver and systems with multiple metals. Polymetallics.
Right. Things get a bit more complex with equivalence here.
We're heading down to Arizona. Aztec Minerals Corp. That's AZT on the TSXV, AZZTF over on the OTCQB. Headline: Aztec Minerals expands drilling at Tombstone Project after striking high-grade silver and gold in Arizona.
And when they say high grade here, I mean, this result from the Little Joe area is pretty spectacular.
Lay it on us.
Okay, hole TR2506 hit 3.04 meters, assaying 2,149.5 grams per ton silver equivalent.
Wow. Okay, say that again.
2,150 grams per ton silver equivalent, over 3 liters.
So that's huge for North America. And was that isolated or part of something bigger?
It was the core of a much wider zone. That same hole had 28.9 meters, grading 250.2 grams per ton silver equivalent. So a broad zone with an incredibly rich core.
Okay, you mentioned silver equivalent. Maybe quickly explain that for listeners.
Sure. When you see silver equivalent, or AQ, or sometimes copper equivalent, CEQ, it means the company has taken all the payable metals, found silver, gold, lead, zinc, in this case, calculated their value based on certain metal prices, and then expressed that total value as if it were all silver.
Got it. So it's a way to combine everything into one easy-to-compare number.
Exactly. It standardizes the results across different holes or even different projects.
And the market, or at least the company, reacted strongly to this.
Immediately. Aztec announced they're expanding their 2025 drill program by 50%. They're jumping from 5,000 meters plan to 7,500 meters.
That's a big jump, putting their money where their drill bit is.
It signals huge confidence, and that confidence comes from, well, the geological model they're working with at Tombstone. It has dual potential.
Meaning?
They think they have potential for shallow, bulk tonnage oxide, gold and silver, think large volume, lower grade, near surface, and potential for deeper, high-grade deposits called carbonate replacement deposits, or CRDs.
So two different styles of mineralization.
Right, and that's attractive. The CRDs could offer that high-grade, maybe faster payback potential, while the oxides could provide a longer-term, larger-scale resource. It's a compelling setup.
Okay, staying with silver but heading south now. Argenta Silver Corp. AG on the TSXV, AGIGF on the OTCQB. News out of Argentina.
Yep, they're extending mineralization at their El Cavar project, and interestingly, they've also hit a new target.
Let's talk about the extension first, at the Yakche deposit.
That's the one. Hole QVD 414 delivered 43.2 meters, grading 545 grams per ton silver. Really solid grade over a very good width.
43 meters. And was there a high-grade core here, too? Seems to be a theme today.
There absolutely was. An 8-meter section within that ran 3,302 grams per ton silver.
Okay, over 1,300 grams per ton silver. That's definitely what gets called bonanza grade.
No question. And importantly, this hole extended that deposit about 70 meters to the northwest, so they're growing it.
On the new target.
Called Atenea. They put one hole into it, kind of a scout hole, and it returned 2 meters, grading 314 grams per ton silver.
So early days for Atenea, but promising first result.
Very promising. And you have to consider the timing here, right? Silver prices have been strong, demand is high, especially for clean energy applications like solar panels.
Right. The whole green transition needs a lot of silver.
Exactly. So these technical wins, hitting high grades, finding new zones, they land really well in the current market.
Okay, but let's inject a note of realism here. They're operating in Argentina. How should investors think about these great technical results versus, potential jurisdictional risks?
That's a fair and critical question.
Right.
Look, operating internationally, especially in certain jurisdictions, carries different risks: regulatory, political, logistical.
Right.
For a project to make sense in that context, the geology, the grades, the potential scale, they generally need to be superior to offset those perceived risks. And Argenta's grades are superior.
So the quality of the deposit has to justify the location.
In many ways, yes. And Argenta's response seems to be demonstrate scale and potential quickly. They just announced a fully funded, much larger drill campaign for the summer.
How much larger?
12,000 to 15,000 meters, kicking off in October. And they specifically said they'll be heavily targeting these new areas like Atenea.
Okay, so aggressive exploration spending to build ounces and try to outweigh those jurisdictional concerns with sheer potential.
That seems to be the strategy. Signal confidence, build the resource.
All right, last stop for today. Let's talk copper. And specifically, the kind of scale needed to be considered world-class.
Yeah, the bar is high for copper these days.
We're looking at ATEX Resources, Inc., ATX on the TSXV, ATXRF on the OTCQB.
And the news is a massive resource update for their Valeriano project in Chile. This really confirms it as a globally significant copper discovery.
Let's get those numbers out there because the scale is, frankly, a bit hard to grasp, the total resource estimate.
It's over 34 billion pounds of copper equivalent. Let that sink in. 34 billion.
Billion with a B. How does that break down?
It includes 475 million tons, grading 0.88% copper equivalent in the indicated category, plus another 1.5 billion tons at 0.75% copper equivalent inferred.
Just massive tonnage.
Truly massive. The CEO, Ben Pullinger, put it bluntly, this scale puts Valeriano among the most significant copper discoveries internationally within the last decade.
So they're playing in the big leagues now.
Absolutely. This isn't just another copper project. It's potentially a Tier 1 asset.
And for investors looking at this, what are the key takeaways beyond just the enormous size? What makes it attractive for, say, a major mining company?
Okay, two really crucial things jump out from the details. First, there's a high-grade starter zone within the resource. It's called the B2B zone.
And the numbers there.
It's 28.4 million tons indicated, grading a strong 1.36% copper equivalent.
Ah, okay. So why is a starter zone so important?
It's all about project economics and financing. Being able to start mining in a smaller, higher-grade area means you can potentially build a smaller initial plant, keep upfront capital costs lower, and start generating cash flow faster to pay back the investment.
Right. De-risks the initial phase.
Precisely. Before you tackle the massive, lower-grade bulk of the deposit, it makes the whole thing much more fundable.
Okay, that's hook number one. What's the second?
Metallurgy. The tests they've done show really favorable results. Recoveries are high, exceeding 95% for both copper and gold.
Meaning they can efficiently extract almost all the metal from the rock they mine.
Yes. High recoveries mean less metal lost to the waste pile, which boosts the project's overall profitability. It's a huge factor.
So massive scale, a high-grade starter zone for efficient ramp-up, and great metallurgy.
You put it all together, and yeah, the implication is clear. This is the kind of asset that attracts the attention of the world's largest mining companies, especially now, with copper demand really taking off.
Driven by AI, data centers, the energy transition.
All of it. Big copper assets like Valeriano, particularly ones with good metallurgy in a major copper jurisdiction like Chile, they're becoming incredibly rare and valuable strategic prizes.
Okay, quite a tour today. Let's do a quick flyby recap of these 5 companies.
Sounds good. So we saw Miata Metals in Suriname hitting that wide, good-grade gold intercept, 35.6 meters at over 3 granite gold, signaling bulk tonnage potential.
Then Galway Metals in New Brunswick with shallow, high-grade gold, 4.1 grand over 16 meters, aimed right at converting inferred resources to more valuable indicated ones.
Then Aztec Minerals in Arizona, just wow, that bonanza silver equivalent hit over 2,100 gram to AQ, validating their CRD concept and triggering a big drill expansion.
Followed by Argenta Silver in Argentina, extending their own bonanza silver zone 43 meters at 545 grand, and kicking off a major drill program to define new targets like Etania.
And wrapping up with Atex Resources in Chile, confirming truly world-class copper scale over 34 billion pounds copper equivalent, crucially anchored by that high-grade starter zone and excellent metallurgy.
So if you tie it all together, what's the big theme running through these stories today?
I think the theme is really about maturation. We're seeing companies successfully convert that early-stage exploration excitement, those initial hits, into defined, substantial resources across gold, silver, copper. It's about building real, measurable scale.
That makes sense. And the critical next step for all of them?
It's converting these resources, and the results still pending, into formal bankable reserves. That's the transition everyone's watching for. Remember, for you as an investor in small caps, seeing that progression from discovery to resource to actual mineable reserves, that's often where the biggest value creation happens. So keep these names on your radar.
Definitely worth tracking their next steps. Okay, that's our deep dive for today.